All right. This is pretty sure this is episode 5. I think it's episode 5. Anyways, welcome back to Learn ICT with Ace. This video is gonna be a hell of a long one because this is time above all. This is something I stand by. I always think submit to time. I trade by time, and of course with fair value gaps and all that bullshit. But I always look at time before I look at price. So does ICT. But yeah, this chapter is time above all, and I really hope you guys will understand this. So do take notes about this hard because this is going to be very important. Anyways, Judas Swing, 7:30 a.m. At 7:30 a.m. New York time, which is GMT -4, every single day there will be a Judas Swing. A Judas Swing is where price will attack either buy side or sell side liquidity. After this Judas Swing has ended, which is more than not at 9:30 open, GMT -4, the market will do the exact opposite of what the Judas Swing does. So if the Judas Swing was bullish, the market will start off bearish when market opens. So first we have this 7:30 is right here. This is the 7:30 Judas Swing. It starts off bullish, and in this case it ends around, I'd say like 10:30. But after that, the market just goes complete dump. Again, we have 7:30, we have sell side here, we have buy side here. And the Judas attacks sell side first. So when 9:30 opens, we should be bullish, and we do. So at 7:30 New York open, New York local time, the market will go either bullish or bearish, which the market always does. So if it is bullish, you want to look for shorts. If it's bearish, you want to look for longs. But more than not, it ends at 9:30 open. But in this case right here, it doesn't end until 10:30, which is the silver bullet, which I'll explain later. Anyways, next up we have midnight opening price. This price is affected by the power of 3. Power of 3 is the next slide, so hang tight. Midnight open is literally the opening price of the midnight candle or 12 a.m. New York local time. So here we have the midnight open price. See, the market did trade up after the midnight open, and then it dumps down, continues to dump. It touches midnight open, reverses back up, touches it again, reverses back up, touches it for a third time before switching to bullish. So this is how price reacts to midnight open. Power of 3. Power of 3 consists of 3 things: accumulation, manipulation, distribution. Accumulation is pretty much consolidation. It's when the market slows down so people can enter in their trades. It's basically when the market starts to move sideways. Manipulation is the breakage of midnight opening price in this case. I'll explain the 90-minute cycles later because that's a lot of things to take in. But for us today, power of 3 is the breakage of midnight opening price. Distribution is the opposite of what manipulation does. So here we have the power of 3 plus midnight open. So here we have accumulation or consolidation. This is midnight open here. We break below it and kind of create a stop rate. I mean, technically we did since we broke this sell side over here. But in this case, we make a stop rate below open. This would be manipulation. After that, it pushes up and it switches to bullish. So the market goes from consolidation to a drop, taking out buyers, and then it pushes up. Accumulation, manipulation, distribution. Yeah. 8:30 opening price. 8:30 opening price should always be marked out on your charts, since this time can act as support or resistance for current trends. Yes, apparently we're trading retail now. Price tends to go for these time marks. So if we haven't touched 8:30, we do tend to go for it at least once a day. 9:30 opening price. The New York Stock Exchange opens at this price. This price will act greater as support or resistance for the current trends and the magnet for the market. If it's a choppy or a consolidating day / week, we tend to just sit at it. So we have 9:30 here, we touch it, and then it acts as support. Continue up. In this case, it's a consolidating day. So we go below it, we go back above it, we go below it, go back above it. See how it is. But this will act as support or resistance. Yes, really. It's weird. 1:30 p.m. opening price acts same as 8:30 and 9:30 opening prices. As you can see, it touches it, goes back up, touches it, goes back up, touches it, goes back up, so on, so forth. All right, this is a lot. Long, intermediate, and short-term highs and lows. Long-term highs and lows. They can be found on lower time frames, but we usually determine them on higher time frames. You might recognize them as major buy-side or sell-side liquidity. Intermediate term highs and lows. These are swing highs or lows that fill an imbalance, such as fair value gaps, WIBs, or liquidity voids. They can also form when a short-term swing is on the left and on the right of it. If that is the case, it's officially becoming an intermediate term high or a low. Short-term highs and lows is pretty much a swing high or a low that forms without an imbalance being filled or inside of a stop rate. They are swings inside of a trend. Here's an example. We have this fair value gap over here. We push up, take out buy-side liquidity, creating a long-term high. This high here can be seen on the 1 hour chart. So this is a major buy-side liquidity or a long-term high where the market is going to take a long time to take this out. We push down and fill this volume imbalance, which officially makes this an intermediate term low. We push up inside this fair value gap, push back down, so this would also be an intermediate term high. We finally break this intermediate term low, which make this high here valid to have your stop losses placed. So if you're in a short here, you could put your stop loss over here. It's not going to take it out. We push down below this short-term low, which it would make this high here, this intermediate term high here valid. But if you're already inside this trade, there's no reason to put your stop losses break even here, because this is a much better high. Or this here, this is a great high. This is a perfect high to place your stop loss. Anyways, we touch this fair value gap, creating an intermediate term high. We drop down, creating a intermediate term low because it has a short term low here and a short term low here. So this one would become an intermediate term low. We push up, fill this volume imbalance over here, which makes this an intermediate term high. We create a short term high here. This is a short term low here too. We have an intermediate term high because short term high becomes an intermediate term high. Remember? Short term, intermediate. And then the market continues to drop. Again, this year would be a short term, this would be a short term. Actually, this here is a short term too. So this here would actually become an intermediate term low. But we break it, making this intermediate term low, or term high, sorry, become a valid stop loss placement. Whoa, all right. Fractals. Fractals is a thing that's happening again at a much lower price leg. You want to look at the order flow and how many ticks it took to maybe accumulate and then finally go its direction of where the market was going. The fractal will do pretty much the same thing again, but in a much lower price leg. If the first one was 50 ticks of range, second one should be within 20 to 40 ticks. It won't be exact, but somewhat close. So this here is the same chart. It's just a little lower in the trend. But this is the same chart. I think it's the exact same actually. Yeah, it is. All right, so this is the same that we did with the intermediate and the long terms. So we have this push up here and then a sudden drop. Then we have this fractal over here. It does the exact same thing as this, but on a much lower price leg. Push up, then drop down. This price leg here is actually the same as this one, but it kind of looks funky. But this is 32 ticks. This is also 32 ticks. But we push up, finally drop down. Push up, drop down, push up, drop down, push up, drop down, push up, drop down, push up, drop down again, push up. This is what fractals are. It's this, but over and over and over and over again. That's what it is. So, what we did today, we learned about Judas swings. We learned about midnight opening price and how it works with the power of 3, accumulation, manipulation, distribution. We have 8:30 opening price. We have 9:30 opening price. We have 1:30 p.m. opening price. We have long-term, intermediate term, and short-term highs and lows. This is what I use a lot, a fuck ton. And then fractals. I barely use this, but it's pretty cool, you know? Anyways, thank you guys for watching. Take care. Peace.